From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
The one and only Larry Fink, the force behind BlackRock, tells Bloomberg, you just heard it live, we're probably in a recession right now. Most of the CEOs I talk with say we are already in a recession. Don't tell the Treasury Secretary that. Scott Bessent appeared on Meet the Press yesterday morning to push back on this idea. Listen.
I reject the assumption. There doesn't have to be a recession. Who knows how the market is going to react in a day, in a week. What we are looking at is building the long-term economic fundamentals for prosperity that I think the previous administration had put us on a course toward financial calamity.
Let's get into it with our signature panel. Rick Davis is here, Bloomberg Politics contributor, Republican strategist, and partner at Stone Court Capital, alongside Democratic analyst Jeanne Zaino, senior democracy fellow with the Center for the Study of the Presidency and Congress. It's great to have you both here. As we watch the numbers tick lower, Rick Davis, your thoughts as the White House tries to push back on the idea of a recession. But if you've lost Larry Fink and you've lost the market, where are you?
Yeah, I mean, yeoman's job to the administration for putting out 6 secretaries of the cabinet on Sunday shows, all basically pleading for time. There's a plan, let the plan work. Obviously, the markets are reacting in a way that is the antithesis of being patient with the Trump policy. So I think the circle is getting smaller, right? Fewer and fewer options for the president. More and more pressure for him to announce that he's easing the tariffs before many of them have even gone into effect. You hear out of the White House and out of the president say, hey, we're negotiating with heads of state, with countries that will bring down these tariffs. But in the meantime, our largest trading partner, China, says, hey, we're up for a war. We're gonna retaliate and bring it on. So. It is such a mixed bag. It's hard to determine where the future is. And this destabilizing that Larry Fink talked about is really what has, I think, befuddled most foreign leaders. Is we used to be able to depend upon the U.S. and our track economically especially. And right now, we're the ones who are destabilizing the global economy.
Jeanne Zaino, you're the one who's been pointing to Congress in our conversations recently. Where is the answer legislatively from lawmakers who are being cast aside by the president here? It should be their purview when it comes to tariffs. Enter Senators Maria Cantwell and Chuck Grassley up with their bill to require congressional approval on tariffs within 60 days. In the period of time that Larry Fink was talking, Axios came out with a scoop saying that the president is now threatening to veto that bill if it is in fact passed. They say it would dangerously hamper the president's authority and duty to determine our foreign policy and protect our national security. So are we now adding a war with Congress on top of a trade war?
We absolutely might be. I mean, there's no question that this bill is not going to make it through the House. So I don't think the president is going to have to deal with a veto. But the reality is, if it did, he would veto it. Let's hope that Donald Trump was listening very carefully to what you were just playing with Larry Fink, and he has heard how his friends on Wall Street are looking at what he's done. And I have to say, Scott Bessent, I actually felt bad for him over the weekend. I mean, he looked so uncomfortable in that interview, and there's no question as to why. He doesn't know one person outside of the administration who thinks this is a good idea. And he having to sit up there and defend it, it was painful to watch. And yes, the only hope now is that Donald Trump is listening to Larry Fink, Elon Musk, Bill Ackman, and the members of Congress, the Republican Party, who will stand up and say, enough is enough, and take back their power, because under the Constitution, Article 1, Section 8, they control commerce and taxing, and we cannot live in a country where one man has the ability to do what Donald Trump has done over the last several days.
Well, Jeanne points us to Bill Ackman, Rick. We are heading for a self-induced economic nuclear winter, and we should start hunkering down. Is he right?
Well, he echoes a lot of the sentiment that we're hearing from corporate titans like himself, who have been enjoying a really robust economy for the last few years and are now facing a meltdown. So, yeah, he should listen to them. And I think he's more likely to listen to them than his own leaders in Congress, because he's turned a deaf ear to these initiatives that Jeanne was talking about. And I think it's only going to get worse. We can now count, a dozen Republicans who have publicly said that they have to contend with this tariff situation and expect to do something about it, in contrast to what the president's saying. So either the president's congressional affairs folks aren't making those calls and trying to explain to them how this is going to work, and the president's team is not publicly talking about how this is supposed to improve. It's basically trust us. And I've never seen an administration that had such an ambitious policy agenda and then basically told the American people, we're not going to explain it to you. We just want you to trust us.
Rick Davis and Jeanne Zaino with us here on the Monday edition. We've got a lot more to talk about, and they will be back in our second hour here. We'll also have a conversation with Republican Congressman Frank Lucas of Oklahoma. Ranchers, farmers in his state are calling. Much more ahead on the fastest show in politics. Do stay with us. Markets are lower. The S&P down 82 points. This is Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
President Trump ups the ante, threatening another 50% tariff on China. Markets resume their declines. Welcome to the fastest show in politics, as stocks crumble today after the White House dashed hopes of a 90-day tariff review. I'm Joe Mathieu alongside Kailey Leinz in Washington. Thanks for being with us here on Bloomberg TV and radio, the Monday edition of Balance of Power. Kailey, they called those early rumors fake news. Markets resume their course lower.
Yeah, perhaps the suggestion the White House was open to a 90-day pause was reported erroneously. At the very least, they have now shot that down, indicating that it is still full steam ahead, especially so, apparently, when it comes to China. Unless China takes off the 34% retaliatory tariffs that it announced it will place on U.S. imports, President Trump is effectively saying he will raise the tariff rate on all Chinese goods that come into the U.S. to 104%. That is the level we're now talking about.
Absolutely. And what that will mean for farmers, for ranchers in states like Oklahoma, something that we're going to talk about coming up with Congressman Frank Lucas, the Republican from Oklahoma's 3rd District, will be with us. Kailey, we heard from Larry Fink live on Bloomberg last hour. He believes we're in a recession right now.
Well, and obviously it's the growth fears and inflation fears that are helping driving the activity in financial markets. Meantime, other countries are still looking for potential off-ramps here, hence the visit to the White House expected this hour from the Israeli Prime Minister Benjamin Netanyahu, keeping in mind Israel's reciprocal tariff rate is 17%. I'm
glad you mentioned that. That would be our top story on any other day. Obviously, a major visit to the White House here in a news conference. We will be hearing from both of them when they have their Oval Office pool spray with the press pool, and then in the East Room, a formal bilateral news conference that we'll bring it to you live here on Bloomberg TV and radio. That's scheduled for a couple hours from now.
That's scheduled for right now. A live check on the markets. We'll send things over to Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much, Kailey and Joe. Indeed, volatile Monday here. Back to work Monday, another manic Monday with the Dow, the S&P, NASDAQ, all very much in the red. Stocks getting whipsawed by a flurry of headlines around President Trump's tariff war, and today's news flow doing little to appease investor concern about the outlook for the global economy. Right to the numbers here with the S&P now down 45 at 5,028. That is a drop of 0.9%. We've got the Dow down 581, drop there of 1.5%. NASDAQ right now lower by 0.5%. 10-year 4.14%. The 2-year 3.71%. And we've got spot gold down $64 the ounce, below 3,000 now. 29.73, down 2.1%. Crude at 61.22 a barrel, down 1.3%. And Bitcoin now down by 1%, 77,945 on Bitcoin. Bottom line here, S&P 500 index extending its sell-off from a record to almost 20%. And we did see a 7% move in the S&P 500 index today. Tesla shares are moving lower. Tesla continuing to slide, dropping below a price at which Commerce Secretary Howard Lutnick predicted those shares would never fall to again. Tesla today is trading lower. Right now, we got Tesla down by 4.4%. Balance of power continues right now. And back we go to Washington. Once again, your hosts, Joe Mathieu and Kailey Leinz.
All right, Charlie Pellet, thank you so much, sir. We'll get back to Charlie in about 10 minutes for the latest on Wall Street here. We've got our eyes trained on markets as they are keying off what's happening here in Washington with a lot of news today on tariffs. We walked through the fake news portion already. According to the White House reports, rumors of a 90-day review are just that, fake news. The president, though, taking to Truth Social a bit earlier to threaten an additional 50% tariff on China. And it takes place as Israeli Prime Minister Benjamin Netanyahu pays a visit to the White House today to talk about Israel's higher than expected 17% tariff. They're going to be holding forth in the Oval Office a short time from now, and we'll hold a joint news conference later on. That's where we start this hour with Bloomberg's Tyler Kendall on the North Lawn at the White House. Tyler?
Yeah, hey, Joe. Well, right now we are waiting for Israeli Prime Minister Benjamin Netanyahu to arrive here at the White House. You might be able to see it over my shoulder for our radio listeners. There's currently an honor guard lined up here in the driveway of the White House North Lawn to welcome him as they begin those negotiations. Now, one theme that we're seeing emerge when it comes to the potential tariff negotiations is that it appears President Trump wants to do them in person. He confirmed earlier today that he had spoken to the Japan Prime Minister and that a team of negotiators would be coming to Washington to further their discussions. Now, of course, as you've been discussing, the biggest story today appears to be President Trump threatening this additional 50% tariff when it comes to China. Critical here, our understanding, according to his Truth Social post, is that this levy would be enacted on top of existing levies, the 20% tariff that's already in place against Beijing, and then, of course, that 34% tariff that we are expecting to go into place on April 9th.
Well, in addition, with reciprocal tariffs on all other partners, Tyler, the president also talked about other ongoing conversations with different countries that he is having. Is there any indication from the White House that deals are forthcoming before the Wednesday deadline?
At this point, the White House is holding pretty firm, right? Senior administration officials had confirmed yesterday that more than 50 countries reached out to the U.S. to negotiate. The question being, what will it take for President Trump to get to the negotiating table? He's previously said that he needs to see something phenomenal, right? And what phenomenal means remains to be seen, although yesterday he did give some indication to reporters that they're really focusing in on trade deficits. That could be very difficult for some countries, particularly ones that we rely on for low-cost goods, to end up meeting in order to get some sort of deal done. But Joe and Kailey, this White House really dismissing investors' fears. I want you to take a listen here to what President Trump told reporters yesterday on Air Force One, saying to hold tight, this is all about long-term gain.
What's going to happen with the market, I can't tell you, but I can tell you our country has gotten a lot stronger. And eventually, it'll be a country like no other. It'll be the most dominant country economically in the world.
Treasury Secretary Scott Bessent yesterday dismissed recession fears, said he's not pricing in one, even as big banks revised their forecasts when it comes to it. And we're starting to hear those Wall Street executives push back, including J.P. Morgan Chase's Jamie Dimon in his annual shareholder note, blasting the policy and saying he hopes to see a quick resolution. Remains to be seen exactly what that will be. But for now, this White House is holding firm.
All right, Bloomberg's Tyler Kendall live on the North Lawn at the White House, where we are seeing on Bloomberg TV the honor guard passing as we await the arrival of the Israeli Prime Minister Benjamin Netanyahu. Thank you so much. Now, as Tyler was alluding to, the administration's response to financial markets, essentially saying that it's not a big deal. We certainly have seen a great deal of volatility, a 7% intraday swing on the S&P 500 today, and we want to get more context as to what exactly is going on in equities. Ryan Vlastelica, Bloomberg equities reporter, is joining us live from Chicago with more. So, Ryan, obviously right now we're not looking at losses as steep as what we experienced at the end of last week, but we have still seen some pretty incredible moves.
Absolutely. Volatility is kind of off the charts today. We've seen just some enormous swings in companies. There was a rumor today about a potential pause that caused stocks to spike, and then when that was sort of downplayed, we saw them retreat back lower again. Everyone is very antsy. Everyone is, shooting first and asking questions later. Everything is being very driven by headlines, by rumor. It's an extremely volatile market right now.
Conventional wisdom seems to be beware the dead cat bounce here. Ryan, I'm not sure your thoughts on this. It was encouraging, even though it turned out to be a rumor this morning, that there was some bid under stocks here. We heard from Larry Fink last hour. He said it's more of a long-term buying opportunity than a selling opportunity, but that doesn't mean the market can't drop another 20%. What would that mean?
Well, people are really trying to suss out what all these tariff implications really mean for the economy going forward. There's a lot more talk about a recession than maybe we even heard, a week ago. I mean, everything has changed very dramatically in just a couple of days. As far as the market is concerned, I mean, we have a company like Apple that at one point today was on track for its biggest 3-day drop since before the iPod was released back in 2000. So the just sheer scale of the selling right now is something to behold. And, it certainly would be possible that we would get some kind of a bounce. Maybe that's a short-term bounce. Maybe this does end up being a longer-term opportunity. But right now, there's still so much uncertainty that it's hard to make any calls one way or the other.
Well, and when we look at kind of regional exposure, if you will, I'm looking at the NASDAQ Golden Dragon China Index right now, down 7 percentage points as the president is threatening a tariff as high as 104% effectively on all Chinese goods. Are there other pockets of the market, Ryan, like that you're watching?
Well, like I mentioned Apple, and Apple is really in the crosshairs of tariffs right now. That's what we are sort of focusing on here. They do so much of their manufacturing in China, in Vietnam, in these countries that are really seeing the brunt of the sort of tariff impact here. And this is a company that we've already been having a lot of concerns about in terms of their growth expectations, their inability to grow as fast as some of the other mega cap peers. It was already trading at a valuation that was seen as elevated by historical standards. So there's really a lot of reason to be selling a stock like Apple right now. And there's sort of fewer reasons to buy unless you are taking a longer term kind of point of view. But I would say a lot of these companies, especially within big tech, people remain pretty positive on them in terms of their cash flow, their balance sheets, their dominance in the markets they operate in. So you will certainly find people who remain optimistic about big tech. But I think right now the short term is so uncertain that everyone is, like I said, just extremely cautious and very prone to be selling.
Ryan Vlastelica, Bloomberg equities reporter, in the teeth of the sell-off. Ryan, we thank you so much. Kailey, it's pretty remarkable to see the VIX back above 50 here this morning. The number that we're looking at, by the way, on the S&P 500, 49.15, a closing level would in fact mean a bear market joining the NASDAQ, which did such last week. Yeah,
a decline, of course, of 20% or more is what would codify that bear market. And it's incredible because we have seen over the last 2 days, at the end of last week, of selling in the equity market, investors seeking haven in the treasury market. And yet that's not what is happening today. We're actually up 14 basis points on the 10-year yield right now at 4.13. So you're seeing selling in stocks. You're also seeing selling in bonds. And I wonder what that signals investors are anticipating about whether or not we will likely get a response from the Federal Reserve to this volatility and economic uncertainty.
Larry Fink was pouring a little bit of cold water on that. I was just thinking that the market's got a bit over its skis, expecting 4 cuts this year. Congressman Frank Lucas is looking at all of this just like the rest of us are. He is the Republican representing the 3rd District of Oklahoma and joins us now live. Congressman, it's great to have you back on Bloomberg TV and radio. This story has evolved a bit since we last talked about it, and I wonder from your standpoint, and if you put your rancher hat on in Oklahoma, if you're hearing a consistent message from this White House and if you support this course of action.
Clearly, the president believes he's going to stay the course. He's determined to change the way we do trade and business around the world. He's using a sledgehammer approach of tariffs. My folks in Oklahoma are still overwhelmingly supportive of the president. And we'll see over the course of the coming hours or days what kind of response we get from our trading partners or competitors around the world. But what choice do we have other than to pursue this for the time being and hold the faith when it comes to the market.
Well, being supportive of the president is one thing, Congressman. Being supportive of this specific policy from the president is another. Are your constituents telling you they're on board with tariffs of this scope and scale?
My constituents are holding their breath. 80% of the cotton we raise in this country plus is exported. 40% of the winter wheat we raise in this country is exported. All the hogs we raise in Northwest Oklahoma get on ships to go to Asia. So these issues are very important to my constituents, but they also understand the status quo for the last 3 or 4 decades has worked against us. And here comes President Trump, prepared not to accept the status quo, but to plow through. Now, we will see over the coming days and weeks and months. I have faith that the president and his inner circle of advisors will make the necessary strategic adjustments if there are strategic adjustments to be made. But let's just take a breath and try to work our way through the next few days. Because after all, if you put the money in the market 2 years ago, from a stock market perspective, you're still several thousand points ahead as of this moment.
Well, to the point that you're making about your district, Congressman, a report by the U.S.-China Business Council found indeed that Oklahoma's 3rd district was the 3rd largest recipient. China, rather, was the 3rd largest recipient of your global exports, which you just described here, $154 million in gross sales. How do you quantify what's about to happen here to local business?
Well, if you look at 4 years ago, when we had the first taste of the trade wars, President Trump responded by urging Congress to provide additional assistance to farmers to weather the storm. And he also negotiated a deal 4 years ago with the Chinese to buy an additional $50 billion in U.S. agricultural products. I'm not sure exactly off the top of my head how well the Biden administration followed through on that, but he remembered who his supporters were and he stood with us. We'll see this time, but you have to have faith. We'll see in the next hours, days, weeks what happens. But movement, it would seem, from our trading partners around the world, might, the president says he's had inquiries from 50 different countries wanting to address the tariff issues. Again, this is a sledgehammer approach, but the system has generally worked against us from a manufacturing point of view for decades. Let's give it a try.
Congressman, one of your Republican colleagues in the House, Congressman Don Bacon, has introduced legislation that looks a lot like the legislation, bipartisan legislation that was introduced in the Senate, essentially requiring congressional approval of the president's tariffs. The White House today has issued a veto threat on that Senate bill that was co-sponsored by Senators Chuck Grassley and Maria Cantwell. Why veto something that is actually technically, according to the Constitution, just you guys reclaiming Article 1 authority that you're entitled to?
Well, I'm very jealous of congressional power under the Constitution. I'm not sure how we got to this point of delegating this much to the president. It is a discussion that has to be had. I'm not sure that right now in the depths of the trenches, economically, is the battle is the place and time to do it.
Just want to mention a breaking headline here on the terminal, Congressman. It appears that President Trump's news conference that had been scheduled for a couple of hours from now with Benjamin Netanyahu has been canceled. They are going to take some questions, I want to be clear, when they meet in the Oval Office, but we're not going to have the formal bilateral news conference that we had expected. Congressman, that's just part of the story today that we're following with regard to these tariffs. And as Kailey mentioned, now you've got essentially a veto threat coming from the White House here. Do you worry? Is your worst case scenario a war between the White House and the Congress on top of a trade war?
I would tell you, Joe, my biggest concern just this moment, in addition to tariffs, in addition to trade wars, the House needs to pass the budget resolution that the Senate has passed with our separate instructions so that we can get on with reconciliation, addressing the national debt, addressing spending, making sure that we don't have the most dramatic increase in taxes at the end of this year and the effect that that would have on the entire economy. There are a lot of pieces in play right just this moment. We need to focus.
Well, of course, one of your focuses, sir, is you chair the new task force on monetary policy, treasury market resilience, and economic prosperity. And given how keyed in the market seems to be to the words of Federal Reserve officials around this, I wonder if you are anticipating we may see intervention from the central bank. Because right now, at least in terms of market functioning, everything looks like it is acting appropriately. The systems are working. And short of that, is there really a need for Fed intervention here that you see?
Well, I have faith in Chairman Powell and the entire Board of Governors of the Federal Reserve System. I think they, using that the spirit of the 1913 Act, will make the appropriate decisions on interest rates, in effect, monetary policy. We'll just have to see over the course of the days. This is a world where we seem to live moment by moment, not day by day traditionally, but we'll see where they go. And by the way, on the task force, our next hearing this week will address U.S. Treasury debt in the monetary system. How do you market, how do you sell all of the Treasury notes, bonds, and bills into the market when you have 7-8 times more paper than we had 20 or 30 years ago, and you have half the market makers? This will be an introduction to an introductory meeting so that the members of the task force can come up with speed with experts in the field. But yeah, you talk about timing of critical nature, a task force focusing on the Fed and Treasury debt. I can't imagine two more important issues for the long-term and intermediate and short-term future of the country than that.
Well, when we think about the short term, Larry Fink was talking to Bloomberg last hour. You might have heard the conversation, Congressman. He's casting doubt on what the market sees as the likelihood of several, maybe 4 interest rate cuts this year, even though he says we're probably in a recession right now. If that's the case, how about an emergency rate cut today?
That's not really a position for me to take a side on, but I will simply say this. A lot of the challenges we face right now have to do with the Biden administration's overstimulating the economy with spending 4 years ago, and we're dealing with a hangover from that. Balancing where we are, interest rates, capital investment, the trade issues, it's a challenging time. I would not want to be the chairman of the Fed or, for that matter, on the board of directors. And we can all offer advice and independence, but it's still a body based on its own insights that makes the decision.
Well, if you don't want to be the Fed chairman, Congressman, I wonder if you envy the speaker this week as well, because he's going to have to push through the Senate resolution, which you were speaking to just a moment ago, that looks different than what you and your colleagues initially passed in the House. And already there are a number of Republicans who have suggested they can't support this, given how drastic the difference is in terms of the spending cuts that are outlined. Are you confident that you actually can get this thing passed before the Easter recess?
Well, let me put it this way. With the challenges going on right now, whether it's the trade wars, the stock markets, all of the bond markets, all of these issues, we in the House Republican Conference have to show forward momentum. We have to demonstrate that we can get our work done. We can get to reconciliation. No matter what the instructions say, it will be that final document put together by the various committees that create the savings that move the process forward. If we can't take that step, then that is the kind of thing that could potentially have a dramatic psychological effect on the market. I've told several of my colleagues, we need to do our work and do it on time this week. We cannot go home for Easter until we've addressed the budget resolution. And if we don't do our work, the market may explain to my colleagues why we have to do our budget and reconciliation work.
All right, we'll leave it on that note. Congressman Frank Lucas, Republican representing Oklahoma's 3rd District, joining us here on Bloomberg TV and radio. Thank you so much. And as the Congressman speaks to the markets, I would point out we actually just flipped back into positive territory on the NASDAQ 100. Let's get a closer look now with Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much, Kailey Leinz. Indeed, it has been that kind of a day. Volatility is the big theme right now. Let's get right to the numbers here because we got the S&P little changed, down 30 points right now at 5,044. The Dow Jones Industrial Average down 478, down 1.2%. For the S&P now, a drop of 0.6%. Let me put this move in perspective. At one point, though, we had a 7% intraday move on the S&P. That is the biggest since 2020, when COVID upended markets around the world. NASDAQ now lower by 25, down 0.2%. The Russell 2000 index of small cap shares lower by 0.9%. The 10-year yield at 4.16%, with the 2-year currently yielding 3.73%. Gold is down $71 the ounce, back below $3,000 at $29.66. Spot gold down 2.4%. West Texas Intermediate crude $61.18 a barrel, down 1.3%. And Bitcoin now with a $78,000 handle. Bitcoin is lower by 0.9%. President Trump has ordered a review of the potential sale of U.S. steel to Nippon Steel, opening the door to amend the decision by his predecessor Joe Biden to block the transaction. Nippon Steel up now by 0.4%. The ADRs. U.S. Steel is up by 11%. So again, recapping, we've got a volatile stock market again today. Big swings. S&P right now down by 0.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington. Back we go to Balance of Power. Once again, your hosts, Joe Mathieu and Kailey Leinz.
All right, Charlie Pellet in New York, thank you so much. Here in Washington, we're keeping an eye on the White House as we anticipate the arrival of Israeli Prime Minister Benjamin Netanyahu, who's set to meet this afternoon with President Trump. The one item that was previously on the schedule has now been removed. There will be no joint news conference in the East Room as was previously planned. So for more on that, we go back to the White House where Bloomberg's Tyler Kendall is joining us once again. So Tyler, it's still going to be an opportunity for them to take questions, I guess, just in a different venue.
Yeah, hey, Kailey. Well, it is breaking news per a White House official. No more press conference at 2:30 p.m. Eastern. But as you say, we are still expecting the Israeli Prime Minister to arrive here at the White House shortly, and they will still hold that bilateral meeting in the Oval Office. Typically how this works is that they are open at the beginning to press to ask some questions, and we get that footage back live. So we'll have to see. As of now, that does still appear to be on the table. We are still waiting for an exact reason as to why that press conference ultimately was canceled. Now, we know, of course, that tariffs are still expected to be a top topic today. I was here yesterday when Israeli Prime Minister Benjamin Netanyahu did arrive here in Washington. There were reports that he had already started the negotiations with some top senior administration officials when it did come to the tariffs. As you well know, Israel had lifted most of its tariffs in the run-up to April 2nd in a bid to try to get ahead of it, try to strike a deal early, and they still were slapped with that 17% levy. Now, our Bloomberg News reporting, according to sources familiar, say that Netanyahu had called President Trump on the phone to try to negotiate a deal. President Trump told him that he should come here in Washington to negotiate in person, and that is how this visit was spurred today. So we're still going to have to wait, see further details, other things that we know, other agenda items, of course, the ongoing war with Hamas and shared concerns when it comes to Iran.
Bloomberg's Tyler Kendall live at the White House, shoulder to shoulder with the color guard as we anticipate the arrival of Benjamin Netanyahu. As Kailey mentioned, the joint news conference has been canceled. We will hear from these two leaders in the Oval Office, and that's where we begin with our signature panel today. Bloomberg Politics contributors Rick Davis and Jeanne Zaino are with us. Rick is our Republican strategist, partner at Stone Court Capital. Jeanne, Democratic analyst and senior democracy fellow with the Center for the Study of the Presidency and Congress. It's great to have you both here. An important day for the markets, an important day at the White House, Jeanne. To know that this news conference has been canceled gives the White House more control over the conversation with reporters. I'm wondering your thought on the strategy here, because reporters will be allowed in the Oval Office, but that's a very different affair than having a formal news conference in the East Room.
It absolutely is. And for somebody who for the last 3 months has been speaking to reporters openly day after day after day, sometimes multiple times a day, as you both know, this is quite a switch for them to cancel this press conference. But I always wondered about this press conference. How could you have Benjamin Netanyahu standing up there talking about negotiating these tariffs out, while Donald Trump yesterday and the day before is saying this is a revolution in the country to revive the manufacturing base? It cannot be both. You can't both revive the manufacturing base and negotiate with a foreign country. And so that is the sort of conundrum that Donald Trump has himself in on what are the goals of this tariff policy. So I always thought it was going to be a very strange press conference to have them both up there. And I think that they are still not sure how they're going to move forward. And that's why we're seeing the cancellation.
Well, but to Jeannie's point on whether or not this is a negotiation, Rick, you also have the president at the end of last week talking to the leader of Vietnam, who said he would drop all tariffs on U.S. products. You have Japan apparently in conversation with the president today. So clearly talks are ongoing. And as we have an eye here on Bloomberg TV and on YouTube on the White House, we see President Trump awaiting another conversation as the vehicle has just pulled up with the Israeli Prime Minister Benjamin Netanyahu inside it. We're now seeing, Joe, those two leaders shaking hands.
Yeah, quick handshake under the portico. This is not a formal arrival on the south portico, but they're in fact right at the entrance of the West Wing. Both wearing matching suits today, it looks like.
Red
Kailey,
ties.
Benjamin Netanyahu got the cue on the red tie. Indeed, they are now heading back into the West Wing for an Oval Office meeting. Around the top of the hour, we expect to have an ear on that.
Yeah, one of the questions reporters just attempted to shout at them, will you discuss tariffs on Israel? I think we know the answer to that question, as we understood that is one of the primary objectives of Netanyahu's visit today is to have that conversation. But if that conversation is happening, Rick, do we not define that as negotiation?
Yeah, I think by definition, him being here and the tariffs are going to come up, that's a negotiation because clearly that's what Donald Trump wants it to be. All weekend we had cabinet members hitting Sunday shows saying, hey, we're going to work out deals on all these things. Be patient. Let us do our work. Don't overreact to the tariff regime. All these numbers, Treasury Secretary Besant said, this is the high water mark. Everything is going to come down from here. And so why not have your closest ally, one of your best friends as a head of state, come to Washington, sit down in the Oval Office and work out a deal? I would be stunned that this visit does not result in some kind of good news about a reduced tariff between Israel and the United States, because that is what the White House desperately needs. Frankly, they need it worse than Bibi Netanyahu needs. And so I can't imagine this isn't the beginning of a series of announcements that said, see, we told you, just give us time. We're going to work out deals that are going to benefit the U.S. manufacturing, and supply capability.
Is that going to be the rollout here? Jeannie, we heard from any number of administration officials yesterday giving us a bit of a confused idea on this. Peter Navarro, as recently as this morning, was talking about raising revenue from tariffs. He referred to them as tax cuts. But if you show up with a bunch of deals this week, we understand the phone was ringing all weekend. The president talked to Japan this morning. Now it's Israel today. Obviously, this isn't going to be a revenue generator. What's the market going to make of that?
Yeah, I mean, it is the uncertainty about what this is all about that continues. And while Donald Trump was winning, if you guys didn't hear, he won, as he said 5 times, the golf tournament this weekend. He sent all these folks out on the Sunday shows that Rick was talking about with mixed messages. Some of them talking about these 50 countries who are trying to negotiate. Then you also had Lutnick saying, no, there's no room for negotiation. So to me, there are 2 things here. Number one is there is a big break in the administration. You have some folks who have a more traditional view. This is negotiation. It's temporary. It's going to be over. Just wait and see. Bill Ackman, don't worry. Everything will be okay. And then you have other people like Howard Lutnick and like Peter Navarro who are saying, no, this is a remaking. And Donald Trump himself talks about a revolution this weekend. And that's the problem with Rick's hope that they come out with a deal. If you are a revolutionary and your base is waiting for you to bring manufacturing back and reshore, help all these forgotten men and women from this globalized economy, how can you then be negotiating out deals with your allies or your enemies? The two don't go hand in hand, and that's the problem, and that's what's creating all this uncertainty.
Well, and we know the markets don't love the uncertainty. Rick, it was interesting. There was some erroneous reporting earlier today, a suggestion that the White House would be open to a 90-day delay on tariffs. Saw the markets rally dramatically off the back after what opened after opening in pretty steep loss territory, a 7% swing. And yet the positive reaction in the markets immediately slapped down when the White House itself pushed back and said that was fake news. What does it tell you that an opportunity to maybe alleviate some of the pain we've seen in the equity market was not one that the White House decided to take? Does that suggest that they do want to be seen as credible on this?
Yeah, look, I think in order to be able to get the kind of deals they want to get from a negotiated posture, they've got to show their resolve. And the idea that we're going to kick the can for 90 days. Maybe had been talked about and someone leaked it who didn't know the final conclusion. But the bottom line is it actually shows how quickly the market is prepared to respond to any good news from tariffs. And so that's why I think they're going to roll out a series of, quote, progress reports on these tariff regimes, because they know that they've got an issue with getting into these, sort of recessionary levels in the market. And they're going to try and put their finger in the dike on this one. It does not do this administration any good to have the markets collapsing while they're trying to implement this weaker dollar, more tariffs, reset of the global economic program. And by the way, let's be clear, that's what this is. It's not just a tariff regime. They are restacking the global priorities based on what the strengths are of the U.S. economy and not anything else.
It's interesting that we're having this conversation after hearing from Bill Ackman, from Jamie Dimon, from Larry Fink today on Bloomberg. Jeanne, I wonder, you heard the veto threat from the White House earlier, this idea of passing a bill that would require congressional approval after 60 days on tariffs. Veto threat to the Speaker of the House, his ally. But it is, in fact, the CEOs and the executives who appear to have his ear. Is it the Ackmans and Dimons of the world who pulled Donald Trump off the course on more tariffs?
I really hope so. Somebody has to. I mean, I think there is a lot of wishful thinking here, but let's take a step back and remember, there is only one thing Donald Trump has been committed to publicly, and that is this tariff regime. It is going to be very hard for him to walk away from that. That is going to require the Larry Finks, the Jamie Dimons, the Bill Ackmans, quite frankly, the Ben Shapiros of the world. All of these folks, Elon Musk, out there saying this is a problem. And then, of course, Congress has a role. And I think we can't forget the constitutional role of the courts here, because the way in which the president did this, to declare a national emergency based on a trade deficit that we have had since the 1970s, is highly constitutionally questionable. So those are the three groups who have got to get to the president and walk him off this ledge. But I think it's going to be tougher because the president has long been publicly committed to this. He's not particularly intellectually curious. And so all the people who are saying this makes no sense, he's out playing golf and $1 million a plate golf tournaments this weekend.
To Jeannie's point on the role of Congress, Rick, in our final minute here, the White House, of course, issuing a veto threat of the bipartisan legislation that has been put forward in the Senate to claw back some congressional authority on tariff approval. Does that effectively kill that effort, or might they pass it anyway?
Yeah, it would be hard to get it on the agenda in the House of Representatives with a veto threat from the president. I think the speaker is still very much in league with the president on his priorities, even though I think they all are looking over their shoulder at the 2026 elections and what impact a declining market at the hands of Republicans is going to look like when they try to run for re-election. So there's a real tension right now in the House of Representatives about trying to maintain a majority through the midterms and still be able to do the bidding of Donald Trump. He's making them walk this plank. And I don't see any distance between the speaker and the president at this point that's going to cause a revolt by Republicans in the House.
Yeah, and the speaker's going to be preoccupied trying to advance budget matters this week anyway. Rick Davis and Jeanne Zaino, our signature political panel, here with us on Balance of Power. Thank you so much, as always. And just to reiterate, we did moments ago see the Israeli Prime Minister Benjamin Netanyahu entering the White House for a conversation with President Trump. They will be answering questions later on from the Oval Office. No Eastern News Conference, though. We'll have more next on Bloomberg TV and radio. Does look like the S&P 500 may be able to escape bear market territory today, though we have more than 2 hours to go until the close. But it's also no question whether or not there still could be further losses from here amid ongoing concerns about President Trump's tariff policy. And you're starting to hear some of the biggest titans of Wall Street weighing in on that question, and others, including the chair and CEO of BlackRock, Larry Fink, who actually sat down with our colleague Eric Schatzker earlier today at the Economic Club of New York and had this warning about how much further we could fall.
Obviously, markets are down 20%. So some stocks are down over 30, 40% from their high water marks of just from January. But in the long run, I would say in the long run, this is more of a buying opportunity than a selling opportunity. That doesn't mean we can't fall another 20% from here too. But I do believe over the long run, the vitality of the United States will persist.
Another 20% from here. Got quite a groan in the room, and that's where we start our conversation coming up right now with, where are we going here?
Mike Regan.
Mike Regan is with us, forgive me, at World Headquarters in New York. Thank you, Kailey, as we keep our eyes trained on the stock market. Bloomberg senior editor Michael Regan, what do you think of this next leg lower? We were actually in positive territory for a spell. The White House helped to knock that down with this fake news blast because there were some rumors earlier of a 90-day review. Now we've been bouncing around the flat line. We're a little up, little down. How would you describe the psychology of the investor who's daring to dip into these waters?
I think it's just not quite unprecedented, Joe, but really close to unprecedented as far as, call it the last 25, 30 years of this market. I mean, to see an intraday swing in the S&P 500 of more than 8% from bottom to top. I mean, that just doesn't happen. It happened in the 2008 financial crisis a bit. We had something similar in the COVID era market. But, this is such an unusual event to see that type of intraday volatility in the market that I think it just goes to show that no one really knows how to trade this market, how to price this market. Obviously, Donald Trump has made himself very unpredictable about when it comes to trade policy, and that is just making it impossible for investors to wrap their heads around what the fair price of this market should be, given all that uncertainty. I do think, Kelly pointed out that 20% drop. We are flirting with that 20% bear market level from the market's last high in February. That is a nice round number that a lot of investors keep an eye out for, potentially buying the dip or the massive plunge in this case that we saw at the end of last week. A lot of the sort of technical indicators that technically minded traders keep an eye on are in that oversold territory that might convince them that it's worth taking a risk here and buying around this 20% level. But really, the longer term it all depends on how quickly we get to the other side of these tariff negotiations. I think part of what's giving the market some comfort today is there is a bit of a drumbeat of news from the White House saying, look, we're holding talks. Everyone wants to call us. We're getting good offers from countries around the world. So there does seem to be an effort from the White House to sort of stop the bleeding to some extent and to tell investors, look, we are trying to make some deals here with these other countries. But then you come out and you see Trump, posting on social media that, we might add 50% more tariffs on China. And it's just really, really perilous for investors trying to figure out where the bottom of this drop is, Joe. Mm-hmm.
Well, and it's one thing to look at the activity in the equity market, but the bond market is also kind of stunning today. We're now up 18 basis points on the 10-year Treasury yield at just shy of 4.18, up 19 basis points now, Mike. And I wonder if that is just the selling pressure finally coming for bonds after the last few days, or if that is telling us something significant about whether or not the market expects that the Federal Reserve is going to get involved in the short term here.
Yeah, Kelly, I think the market is really trying to struggle to figure out what the signal from the bond market is today. It's possible, when you have this much turbulence, people sell what they can, to meet margin calls and that sort of thing. It's also possible, the inflation implications of these tariffs are a concern for many people, as is sort of the reaction from governments that hold treasuries around the world who might not be thrilled to be hit with these tariffs and potentially some speculation that they might start selling some of those tariffs. So there's so many different variables going on. It's really hard to sort of put your finger on exactly what is causing that bond market movement. But it is, I think, catching a lot of people by surprise that when you see this sort of risk off that we saw in the morning in the stock market, typically that is associated with a rally in bonds and lower yields. And we're just not seeing it today. And I think it's just one of those wild markets that doesn't make a lot of sense. And you can't really attribute your typical fundamental drivers to what's going on in the price action that we're seeing.
All right, Mike Regan, Bloomberg senior editor, thank you so much. Right now, if this holds with a 20 basis point move upward on the 10-year Treasury yield, that would be the single largest single-day move up in yields since September of 2022. Pretty incredible to see that. And we want to get more on what's happening, not just in these markets, but what markets are signaling about the forward look on the economy. Betsey Stevenson is joining us now. She's professor of public policy at the University of Michigan, also former member of the Council of Economic Advisors during the Obama administration. Betsey, welcome back to Bloomberg TV and radio. As we consider here the idea that President Trump today has floated even higher tariffs on China than previously thought, potentially reaching 104% with this current regime, assuming there is no backing down, is this a greater inflation risk or a growth risk to you?
Oh, boy, that's a really hard question. I think that's why no one knows what the Fed's going to do. There is clearly an inflation risk, and we know that these tariffs are going to bring inflation. Of course, that what they bring is a one-time jump up in prices. And so the Fed has to ask, can we look through this period of inflation? Can we say transitory again, ignore it, and then focus on the growth? Because there's clearly going to be a big hit to growth. The challenge I think that the Fed has is that it's just not 100% sure what it should be doing. Does it want to try to stimulate demand in this environment? Does it want to slow demand down? If I was there, I'd be more worried about the risk to growth because unemployment has long and permanent effects. So I would really be focused on that. But equally, I think what they're going to have to be looking at is not what do people expect for inflation this year. We all know inflation is going to be higher this year. But what do we expect is going to happen to inflation in 3, 4, 5 years? And we have very fragilely anchored inflation expectations right now. If they see that fragility getting even worse, I think they're going to have to turn to making sure that they keep those anchors in.
We heard from Kevin Hassett over the weekend. He did Sunday morning television, Betsey, and suggested that the phone is ringing off the hook at the White House. And if you listen to what he said, you might envision a world where there are no tariffs in the near term. Let's listen.
So the fact is the countries are angry and retaliating. And by the way, coming to the table, I got a report from the USTR last night that more than 50 countries have reached out to the president to begin a negotiation. But they're doing that because they understand that they bear a lot of the tariff. And so I don't think that you're going to see a big effect on the consumer in the U.S. because I do think that the reason why we have a persistent long-run trade deficit is these people have very inelastic supply.
What's your thought on that? We know that the president spoke with Japan earlier today. He's meeting with Benjamin Netanyahu now. We get to the end of the week. Let's say these 50 leaders cut deals with the president. Does he look like a genius? Markets up 1,000 points?
No. So let's start with the simple thing. Look, I don't even think Kevin Hassett believes what he was saying. Why are countries coming to the table? Not because they think they're going to absorb the price increase, but because when prices go up all around the globe, we all sell less. The stock market is not falling because they're worried about having to pass through prices onto consumers. It's that when you pass on high prices, if the price of Nikes goes up 30%, you know what people are going to do? Buy fewer Nikes. And so even if they're passing all those prices on to consumers, it's not good for Nike profits because people don't buy their product. And that's what countries all around the globe are worried about. It's about the shrinking of trade, not about who's paying the prices. The American consumer pays the prices, and the administration even believes that they pay the price because they're talking about the great, gain in revenue they're going to get from these tariffs. So they know that the tariffs get paid here, that it's not going to show up in terms of hurting some other country. So then you said, well, wait, could Trump be the genius who eliminates tariffs? Tariffs were incredibly low before Trump started all of this. I think the reason he has shocked markets so much is because everybody thought, oh yeah, maybe we're going to get 3, 4, 5, 6% tariffs. That's going to be a huge increase compared to the past, but not these numbers that are like, early 20th century tariffs. Nobody expected them because they are enormous. No other country has them. Calling them reciprocal tariffs is completely misleading. It's not, Vietnam is not charging us 46% tariff, which is what we put on them. They're charging us like a 1.5% tariff. So is he a genius if that 1.5% tariff goes away at the cost of all the turmoil he's caused around the globe? I don't think so.
Well, one of the things he argues is that this brings back more manufacturing to the U.S. My question, Betsey, is when you consider that there's tariffs on actual raw materials like steel and aluminum, potentially lumber coming down, what impact that would have on actually the ability to build out that infrastructure, let alone to find the labor force to build those factories or populate them ultimately when construction is done, given some of the other efforts around migration specifically in this country. How easily can it realistically be achieved if some of those barriers are put into place?
You know, everything you said is exactly right. And then let's add on top of that, that it takes several years to build a factory and get it up and running. We're not talking about building factories in the United States where we assemble Nikes. We're talking about paying more for Nikes. You know, even if he's talking about protecting American manufacturing, he is hammering the American auto industry with this. They are suffering more because of all of the tariffs on the components of cars. Look, we cannot have a car or even a bicycle without imports because we don't have rubber in the United States. So what are we supposed to do to actually move that car down the road if we don't have wheels? It's just not, it doesn't make any sense. If you want to support American manufacturing, you don't do it by making all the ingredients in American manufacturing more expensive.
Betsey Stevenson was ready for this conversation, professor of public policy, economics, University of Michigan. It's great to have you back on Bloomberg, Betsey. We'll be deeply curious to see, Kailey, what the University of Michigan Consumer Sentiment Survey says at the end of this week as we really start to bump into the corrosive impact here, the emotional impact of these tariffs on the markets and consumers.
The question is, even if you see sentiment further falling off a cliff and inflation expectations rising, does it move the White House that is standing pretty strong on its policies, at least for now?
Depends on who's talking and when. We'll hear from Donald Trump and Benjamin Netanyahu a bit later, and we'll bring it to you live here on Bloomberg TV and radio.